Welcome to Pre-Market Prep. Spencer Israel, Joel Elconin, and Dennis Dick. I have had myself a morning. I'm in no mood to take anything from anyone. Joel and Dennis are in a little bit better mood than I am. We can talk about why I'm in a bad mood if you want, or we can just go into the news of the day. We have a lot of stocks moving. I want to talk about the Cathie Wood interview yesterday on CNBC. I watched it. I took notes, and I have some thoughts. So that's our show for the day. We'll talk about the earnings. We'll talk about Roku, DraftKings. Mark Mahaney should be joining us today. He is the Senior Managing Director and Head of Internet Research at Evercore ISI. A brand new guest on our show. Looking forward to that at 8:35. So that'd be great to talk to Mark. So smash that like button. Good morning, everyone in the chat. I see you all there. I see you, Red Rum, Surfing Dragon, Ron, A1 Property, Josh, Hurt, Kenny, Raul. Good morning, everyone. Let's smash that like button. Let's get to work.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
All right. Good morning, Joel. Good morning, Dennis. I hope your mornings are going better than mine is. Frankly.
Oh, it is, Spencer.
Okay.
We're trading up 21 and a quarter handles at 95.75. Important levels all over the place for the futures, the S&P futures. Crude down $1.76 at 88.29. Gold back under 1900, down 560 at 18.96.50. Silver, that's going the opposite way. That's up a couple pennies at 23.90. Bitcoin, that's down $435 at 40,465. And Ethereum, that's just flat there, up $5 at 29.0350. Before we bring in Triple D, I know you're chomping at the bit here. Spencer, could you give me a breaking news, please?
Sure, Joel. Anything for you. What's up?
The breaking news is that the Spice Girls have added someone to their repertoire. And, there's Baby Spice, there's Sporty Spice. Well, let me introduce to you Spencer Spice.
Spicy Spencer.
Spicy Spencer, man. Don't
tell us about your morning. Spencer,
don't mess with Spencer today. Don't mess with them.
So you want to hear about my morning?
Yeah.
No, I'd rather just show you my morning. This is my morning. I want to be absolutely clear. I hope Sonos.
You were at a rock concert.
I hope Sonos goes to zero. Okay? We have a Sonos system in our office. Now, if you're connected to the Sonos via the app and the Bluetooth, then you can play music. And if you're not, you're locked out. And someone decided to play the Sonos at full volume and then go home. And
so it's just played all night blasting.
Played all night blasting. And if you don't have access, you can't turn it off.
So you've been all morning trying to shut that horrible music off.
Yes.
Fun.
Yes.
Was it just that song on repeat, or was there better songs?
No, it was changing. It was changing.
Was there any good songs in there? Because that was a horrible song. Whatever that was, Joel and I maybe we're just old, but that wasn't even music. That sounded like something like a train coming down the tracks. That was horrible.
And then at around 7:15 this morning, I went to go get some coffee from the cafeteria, and I left my badge on my desk, and I got locked out of the office for 20 minutes.
How'd you get in? You had to go get somebody in a key.
I had to get someone to let me in, and then I said, "Excuse me, I'm locked in my office. Can you let me in?" And so she's like, "All right, I got to call the engineer." And I was like, whoa, engineer? No, my badge. And she's like, oh, your badge. Well, there's a difference between saying I left my badge on my desk and you got locked out of the office. I was like, all right, whatever. Just let me into the office, please.
You've had a great morning. So you're telling me you're a little spicy.
I don't even know what's happening in the markets. Okay, so just fill me in.
It doesn't even matter.
It doesn't even matter
It
anymore.
doesn't even matter today. He's starting to get in a better mood here. When I first logged in, he's like, read the chat.
Wait,
read
Dave,
this.
hold on. Dave, there's nothing to unplug. It's in the speakers in the ceiling, connected to someone's Bluetooth somewhere through the app.
There's no
There's
place
nothing to
well, how
unplug.
do they connect to it if it's in the like? How do they? It's got to be a. Anyways, we're not going to troubleshoot the electronics in Benzinga office, but holy mackerel, I'd be annoyed with that too, though.
SONO. I'm gonna
SONO.
I'm gonna
Joel, give us a technical. Is it indeed going to zero?
Uh,
wants it to go to
let's
zero.
do
Is it going to
that.
zero? Actually, it looks like a great sell up here. I'm not going to lie to you. Actually, I do
Yeah,
like
look
this
at
as a
that.
short.
Yeah.
That's a nice setup right there. Did it already report? I don't even remember. I think it reported.
Yes, it did.
Yeah, you know what? Here, actually, look at this. You're
Oh.
bringing us a trade here. Yeah, you go from 30 down to the 22, up to 28. You got all this consolidation right in here now the last 3 days. Break down below yesterday's low, 27.26, and maybe look at the 50% retracement down to 25. I actually do like it for a short, Joel.
Listen to Triple D.
Selling the rip in a stock that's trending down. Everything actually, it looks pretty good on the short side.
I tell you where it gets interesting is under $27. 10th, 11th, and 14th, 06, 07, and 11. 27 handles. So
below that key part of the door, we're going to zero.
Spencer giving us a trade of the day.
Yeah, I kind of like it on the short side. I'd rather be short than long. I'll say that.
Here I come.
Spencer's jumping in
for
there.
a shot.
Those revenge shorts never work though, Joel. It's like when you get a bad experience. I remember having a bad experience at like, I don't know, it was an auto dealership and it was like Ford or something. I short that stock. It was years ago. Coming in there, I mean, you can't even give me a good customer experience here. This is going to zero. And then short and the thing just goes up like 10% the next day. It never works when we get those revenge shorts. When you have a bad experience with the customer, I'm gonna go short your stock. What do you think about that? And you lose. So that's the warning on the Sono short, is it always seems to get you like that.
Fair enough.
But anyways, let's talk about, stocks that are getting hammered here today. Maybe Sonos gets hammered in the future, but there are stocks getting hammered here now, and it's pretty much every Cathie Wood stock. I mean, she was interviewed on CNBC yesterday. The stats, if those are correct, are absolutely incredible. They said 100% of her stocks in ARKK are in a bear market. 100% of the stocks are down at least 20% from the highs. The market is even down 20% from the highs. That's nothing short of incredible.
So I have thoughts because I watched the interview last night, right? And so I have some thoughts on this. First thing I want to say, she was on the entire show. It was a 40-minute thing, and they did not take it easy on her. The first thing I want to do is I just this is like a small thing, but I want to come to Cathie Wood's defense with regard to the Zoom situation. If you're on Twitter, you saw the screenshot.
Do you have it?
It's
funny. Bring it up. Find it. It's worth actually waiting the minute to bring it up. I laughed out loud. Like if I was drinking coffee, I would have spit out my coffee when I saw that. But then it's not Cathie Wood's fault, apparently.
So during the course of the interview, and all right, I got
when they got 30 minutes into the interview.
During the course of the interview, a Zoom message popped up on the screen. It said running out of time.
Can we zoom in, pun fully intended, to see that a little closer?
Are you running out of time? This meeting will end in 10 minutes. Upgrade now to remove the 40-minute time limit. Now
this is on CNBC. And obviously, and then people were tweeting out, "Look, Cathie owns all these shares of Zoom. She doesn't even pay for her Zoom account." But she wasn't the host.
Nope.
So it wasn't her.
Not the host. And the reason I know she was not the host is because when Jason was on CNBC back in October, from our office, we connected through their Zoom account.
Yeah.
They invited us to a Zoom meeting.
Yeah.
So the takeaway here is not that Cathie Wood owns Zoom and doesn't even pay for it. It's that CNBC doesn't pay for Zoom.
That's crazy. That CNBC doesn't pay for Zoom. And this is why Zoom is in a world of hurt here. I mean, I know I get the email because I have a free Zoom account. Did it come this week? Oh yeah, look, it comes like every week. They said last chance to me 2 months ago to get 25% off. Last chance, upgrade to Pro today and save 25% off from Zoom video communications. Oh, look, but oh no, we have another sale. Now it's last chance to save 30%. So they're offering me even more. This was a week ago. So I mean, they're still offering these deals. I mean, when you're stock. And I've said this on the show a month ago when it was $200 a share. It's now $129. But I said, when you own a company and they have to discount and offer you discounts to get you to buy the product, that's a product you don't maybe want to own the stock of. And here we are, Zoom. People are saying it's a value story. I've argued that I think you're going to start to see those growth rates decline significantly, and would not even be surprised if it actually sales start to decline overall. So I don't think they're not. I don't even think it's an issue of growth. I'm scared they've pulled so many sales forward. The competition is so intense now. Unless they get another product, this is your classic value trap. Now, we've been bearish this stock since 500. So it's 129. At a certain point in time to get off the bear train, maybe it's oversold. Am I shorting it? And would I short it now? Probably not. But I mean, to just say, oh yeah, that's trading with the PE of whatever the hell it is, it's fairly low. I think it's a classic value trap because I don't think they're growing.
I need to interrupt you. There was a headline that just came through that they're evacuating let's see, the separatist leader in eastern Ukraine announced the evacuation of residents to Russia. Yeah, so that headline just came through. That's why we just tanked here.
Yeah, this is what we continue to see here. Taking it back to this is this is just the market where you got to be selling rips and lightening up. There's too many unknowns. So okay, so it's fun.
Who's evacuating where? Wait, go ahead.
So there's there within Ukraine, right? There's Ukrainians and that are against Russia, and there's Ukrainians that are for Russia. And the Ukrainians that are for Russia in the eastern part of the country have, I guess, evacuated to Russia. That's what that headline means. So
I think Mitch has got it right. Here's my thoughts, and we'll take it back to Cathie in a bit because it's a fun conversation. But my thoughts are Mitch has this right that he's not going to attack during the Olympics. He's, China, he wants China's support here. I mean, he's not going to do that. So I think he's waiting till after the Olympics, and I think he's going to invade. I personally think he's going to invade next week. So I think the market will be worried about that too. This is why I was going to say, we never got to it, but I was going to say when we were up 30 handles this morning,
I know.
This is an awesome sell the rip opportunity here, because who wants to own stocks into a long weekend with the Olympics ending and a potential invasion into Ukraine? I don't want to own stocks into that. That's why we sold off yesterday. I think it's why we continue to sell off here today. So I'm selling rips until further notice, at least today. I think there's no such thing as an easy setup, but I'd be very concerned if I own stocks, just like short-term swing trades into the weekend. I own long-term, not selling my long-term account. I'm 35% cash, so I'm a little bit nervous because I'm usually about 15 to 20. So I'm more nervous than normal on the long-term stuff. But I have no swing longs on zero, and I'm just scalping, day trading, in and out, doing my stat herb and that kind of stuff. But, hedge trading, like market neutral. So, and that for the simple reason is I think Mitch is right. I think, if they're going to invade, it may end up being next week, and that could be an
think about the implication of the headline that I just read. Right, people are evacuating to Russia. Why would they be doing that if not to prepare for potential escalation? Right.
Yeah.
So
I think everybody, they were saying it even on CNBC.
No, Joel. These are Russian sympathizers. These are people that are on Team Russia.
Okay. I was going to say, we're having a war, but hey, if you want to come over before CNBC, it starts.
Gamesaholic saying I'm an idiot. That's fine. Everybody's entitled to their opinion. They're saying this is a stupid comment, but I think that they're not going to invade this week. And they said it on CNBC yesterday too. We've been saying it on the show. Mitch has been saying this on this show for a week. They said it on CNBC yesterday. They wait until after the Olympics. We were saying this. Mitch was saying this a week ago. So I'm just saying traders are in high likelihood to be nervous going into a long weekend with a potential invasion happening. I don't think that's a stupid comment.
That's just history. That's just market history making that kind of comment. There's been big moves over 3-day weekends going back to the 80s, going back to cotton. I'm trying to think, and maybe even the 90s or mid 80s when I was on the floor. There was one day where they 3-day weekend and something did with the currency. So this is nothing new. I mean, it happens 3-day weekends. The markets are closed except for the S&Ps. The S&Ps will be open. They'll be open Sunday night at 6, and you'll be able to trade them until 1 p.m. Eastern time. So,
And then we're closed Monday, remember. So we
well,
don't get
right.
back till
Yeah.
Tuesday.
Right.
S&P futures are open, but there's a lot of stock traders that are just stock traders that
Right.
don't trade
Right.
futures.
Right.
There's going to be a lot of institutional money managers that might be nervous holding through this weekend
Of
with the
course.
potential that the Olympics are. But people are saying I'm stupid in the chat for saying that. So I should retract my statement. I'm not going to say I think they're invading next week, but I think the market will be nervous of the possibility of an invasion next week. That's what I'm going to say, just to clarify here. I think the market will be nervous going into this weekend, which makes me not want to buy the S&Ps when they are trading up here this morning. It actually makes me more inclined to short the S&Ps when they were trading up this morning. But again, we just gave back 10 handles, so the shorts were looking a lot better an hour ago than putting them on. When
We can shut down the chat if you want. Spencer
no, the chat's fine. There's lots of good people, and everybody's entitled to their opinion. And maybe I wasn't clear when I'm saying I shouldn't say, oh, I think they're going to invade next week. I shouldn't have said that. I should have said, I think there's the potential for an invasion next week. And I think traders are thinking the same way that Mitch was thinking, who was saying it a week ago, which I think he's right. And when they're saying it on CNBC now, too, that means there's other people thinking it as well. So I know they like to take our content. I'm sure they didn't take that, though. That's just, it's common thought out here that they're probably not going to do it during the Olympics. So if they're going to do it, it could end up being next week. I'd be nervous holding stocks into the weekend.
William in chat was asking what the source was for that headline. It was from Reuters. So, yeah, pretty reliable there. That's not just some fake headline. That's from one of the 2 or 3 major.
Are wars good for the economy?
They're good for Lockheed Martin. You want your war stocks? LMT, LMT, NOC, General Dynamics, RTX, and then all your oil stocks,
and then LHX is your last one.
LHX too, yeah, Harris Corp. But the one you think about first is Lockheed Martin. That's the one that pops in my head right away when you start thinking about there's potential for escalating. And it's Lockheed Martin that pops in my head. And there's a reason Lockheed Martin's sitting near all-time highs. Right. Oil, same thing. Oil probably pops. You get the concerns. So
you know what the real defense stocks are going forward, going in the next 50-100 years. CyberArk. There's your next big war.
Well, let's take it back to Cathie because this is getting into
Okay, go.
I agree. I actually love the cyber security stocks. I think on pullbacks here, I think that is where you maybe want to put some capital. They've held up very well too. I mean, Palo Alto Networks, which is going to report next Tuesday, has held up incredibly well, considering how much they've hammered nosebleed stocks, and PANW is not a cheap stock. So it has held up well. So cybersecurity is still an issue. Cybersecurity stocks, I always like CyberArk, CYBR. I mean, CrowdStrike is one that has been hammered. Do you think about buying a CrowdStrike eventually? I think you do. But right now, just everything that is trading with nosebleed valuation continues to get punished. So I was like, why am I hurrying into this? It seems like if I wait a week, I get the stock cheaper. It's the same reason why we just continue to bleed in Facebook. It's the same reason why we continue to bleed in PayPal. It's the same reason why Shopify loses 150 points on earnings and then loses another 100 points the next day.
Like nothing. Just another day at the office.
If you are trading with a nosebleed valuation and you say anything remotely like growth is slowing, they hammer you and they continue to hammer you. If you're buying that first day on the dip, you are not listening to this show because they have been hammering these stocks nonstop. I mean, PayPal, what's the P on PayPal now? We went from, this growth story, highly valued stock, it almost is entering value territory.
That's what I was going to say. No, it's not.
It's not quite there yet, though. And this is how ridiculously valued these are. But what's the PE on PayPal?
Wait, what did you ask? PayPal or Shopify?
PayPal.
It's not crazy.
Sorry. PayPal's
not crazy.
Is 23 actually. That's
that's probably the lowest PE.
That's the S&P is like 23.
That might be the lowest PE PayPal has ever had. Like from when it came from eBay and spun off. I don't know if it's ever traded with a PE of 23. Is it a value trap? Is it getting under attack? Is the growth slowing there? Potentially. But it's starting to enter value territory. Will I buy PayPal eventually? Probably. But do I want to be the first one when it goes down $5 every day? Let's let it stop going down first. I don't want to be the hero, catch the falling knife, because that's what you're doing. PayPal was probably, starting to get cheap at 130, 120, 110, 105. Well, just as much as they get expensive to the upside, they can get really cheap to the downside. Maybe the party does continue on the short side for some of these stocks. I mean, it's come all the way down, PayPal 105. Why not breach 100? Why not? If you buy PayPal today and look at it 5 years from now, are you making money? I think so.
I don't know about that. I don't know.
You don't know. Maybe not. Maybe not. It's hard.
We've said that about we've said that, or you've said that about other stocks too, and it doesn't.
Which stocks?
Rocket.
Rocket.
Yeah.
Like bullish Rocket.
Yeah, I know
maybe in 2020.
right.
Maybe in 2020. I haven't been a fan of a lot of those higher growth names, and it could be a value trap. Nobody knows anything, Joel. Bottom line is we don't know. Nobody knows 5 years.
We know the market's going down right now.
What's that?
Yeah. I said we know we're selling off right now.
Yeah. Well, it's another gift rally. I mean, you got to take these gifts. I mean, we got, the setup here, and that's what I was looking at this morning. I'm like, you're looking at the S&Ps trading up 30 handles into a long weekend with the Olympics ending, with the potential for an invasion next week. Come on. That's low-hanging fruit. So I know people don't like to short stocks, but if you're like long stocks and you see a rally, and it's like, you got to think about what's happening. This market is so simplistic. And people try to get, the market has always been simplistic. And that's what people struggle with the most with trading. Why do I make money on a consistent basis trading? Simplicity. I mean, I made a lot of money just selling stocks when the headline came out Thursday night that, hey, Russia's putting in more troops. I mean, people will say on Twitter, don't trade headlines. Headline traders all lose money. Hogwash. It's the traders that say that, or the traders that don't trade the headlines. Ask the headline traders. Your prop traders and your prop firms are trading headlines. You get like low-hanging fruit, and the S&P sell off 5 handles, and CNN all of a sudden is breaking that they're not taking troops out, they're adding more. We rallied 50 handles on that one day, and now we sell off 5. That's not enough. Well, we sold it all back off yesterday. So, I mean, trading, just on logic and trying to predict the next movement when you can kind of see what's happening. There's money to be made there. You can have the prettiest technical setup in the whole world. It doesn't matter. Russia goes in and invades Ukraine next week. Stock's probably going down. So, and people say I'm mad. I'm trying to make points. It's not mad. It's a loud voice. It's not mad. Who's mad? I mean, I'm doing well in this market. I mean, a lot of people, say, oh, this market's been a killer. Everybody's losing money on it. I'm actually, I've had one down day, I think, this year. On my Bright trading account. What are we? 40 days in, 35 days in, and been pretty good trading.
Volatility.
You just gotta there's lots of inefficiencies, but I'm not making money on the long swing side. In 2020, we were doing long swings and they were all kicking ass, and everything was going up. It's not Kansas anymore. You got to do different strategies, take advantage of different things, trade headlines. Here we are, we're coming down. We're giving it all back again.
I know.
What does this market continue to do? It continues to give you these gift rallies, and everybody thinks, oh, was that the bottom? No, but this is the top of this next little move. I mean, maybe we should start asking, and let's think about this. The S&Ps are still sitting up here. We're what?
I know.
7-8% off all-time highs.
I know.
10%?
We went over this yesterday.
Much.
We're nothing. We're nothing.
It makes me want to sell all my stocks. I think we could go a hell of a lot lower here. I think we could go, if they start coming for the soldiers, they start coming for Apples and Amazons. I mean, Apple is what? How far is Apple off the all-time high? 182, 168.
Where the Apple?
It's up 8 now. It's down 9% from the all-time high after having a ridiculous year last year. I own Apple. I wouldn't want to have it on for a trade here though. So I'm not trying to scare you guys all out of your portfolios, but just think. People have got to stop thinking about, oh, was that the bottom? Oh, was that the bottom? I get that question sent to me 10 times at least every day. I'm not joking. 10 times. Was that the bottom? Was that the bottom? Was that the bottom? That's been going off the last 6 months. No, it wasn't. Cathie Wood saying on CNBC interview, take it back to her yesterday. She said, I believe ARKK bottomed on January 28th. Well, sure it did. But you know what? Here you are 2 days later, and she's going to retest that bottom maybe today. So she was trying to say her all-time low is going to be in here at 64.35. That's what she was implying.
Yeah, right.
No, Spencer. That's what she was implying, that her new low, that she will never be that low again. It was totally implied in that interview. That 64.35 is the low, and we're only going to continue up from here, and we're going to go up 400-500% in ARK from this point in time. That's what she was implying in that interview yesterday. She might be wrong 24 hours later. Her ETF might sell off 15% to make her wrong 24 hours later. She's had some incredibly bad calls. So just to keep jumping in her stocks, the Palantirs, all these stocks, we're doing it wrong, folks. We just went red on the S&P. The selling the rip in 2022 is working better than the buy the dip in 2020. And that's the truth. That's my rant.
We should end the show on that. I like that.
That's the truth.
Yeah.
And everybody keeps trying to buy the dip, when if they were just selling the rip, they'd be doing the exact opposite of 2020 and killing it. Sorry, that's the truth. I don't know when it all ends. I don't know when the bottom.
Why does it have to end? Why does it always have to be?
I'm just saying it could be. It could be an early innings on some of these stocks. Yeah, like what? She blew out Palantir last night. Yeah, let's talk about that.
4.5.
The believer, the 5-year time horizon, that everything. Palantir was one of her core holdings. She sold almost 5 million shares yesterday at near the all-time low. So obviously she's saying, I got that one wrong. Did she get some of these other ones wrong? Just asking.
Yeah, I mean, I as I said, I watched the interview and I have a bunch of thoughts on it. Basically, what it came down to is she does repeat a lot of her main talking points, a lot, but it's really difficult for someone like her or anyone really. It's difficult for anyone to explain. She's all about disruptive technology, right? She talked about AI a lot yesterday, artificial intelligence. It's really hard to explain that away in a 1 to 2 minute soundbite. And it's hard to make sense because stuff is really complicated. So kudos to her for her convictions, and she's definitely, going.
Yeah,
she's been going down with it. I don't want to say she's going down with the ship, but she has been going down with. She's not jumping ship. She's doubling, tripling down. And they've done that, and she said this as well. They've been focusing or concentrating more on their strongest convictions, right? The funds have been shrinking in terms of number of stocks that they own, and they've been concentrating into fewer and fewer.
Does she do any hedging?
No.
I mean, do we know this?
She only buys really high valuation stocks.
But she doesn't have like a futures account or something.
No, she doesn't. No, because she's long term, and that isn't the thing. But Joel, that isn't the thing for an ETF for these money managers to do. They still are benefiting from an uptake. Yep. I mean, that's what they are. They're not traders. She's not a trader.
Yeah, and people saying that she is, trading it like she's making like rookie trading mistakes. She's not a trader. She's not a trader. She's not trying to trade. She's trying to.
I said that yesterday.
Jim Cramer said that.
Cramer said that too, and I agree with him. And you know what? It's okay. So maybe we should clarify. It's rookie investing mistakes, adding to losers. Believing that she said it on the CNBC interview. The market is wrong. I am right.
Can't do that.
How many books do you read that say when you believe the market is wrong and you are right, you are the wrong one? All of them.
It's also
they're all right. The books are right.
Your P&L's right.
Your P&L. The market is right. You're not. It doesn't matter. And you have 5-year time horizon. And maybe a lot of these stocks are going to come back, but it still means you were wrong because you bought all these stocks. You could have bought them all 50, 60, 70% cheaper. So your timing was absolutely wrong. So she's already been proven wrong in that way. The question is she going to become more wrong? That's the question. Maybe that's Cathie calling. Is going to be wrong more wrong.
I just don't know how did she could. The clearing, I don't know who the clearing is. I don't know how impatient investors are with the market. I mean, I don't understand. where and also has an abnormally high fee too to manage money. So
Well, it's not
It's not
I mean,
crazy.
it's high in the
it's
it's
people
high
aren't charging much,
it's
man.
high on the spectrum of ETFs, but it's really low. It's lower than
Okay.
Yeah, I don't think any of that. I'm not challenging any of that. I've only challenged her core strategies. And, we've challenged this for a long time and we've been wrong. We were wrong in 2020. Very wrong. I was very wrong to be bearish Cathie Wood stocks in 2020. Absolutely wrong. I'll admit it. I was wrong. I did not see this market being able to. I was long some of these growth stocks, but I did not participate like ARKK. I should have had all my money in ARKK 2017, 2018, 2019, 2020, and he had been killing the market. But now you're at a point where it is catching up. And in the long run, the 5-year time horizon, you wonder if she was really benefiting from the story, everything valuations out the window, to this market that all of a sudden cares about valuation. And you look at, Roku, one of her biggest holdings. I believe this is the third biggest holding in her ARKK flagship fund. It is now off, 80% from the highs?
And punished today.
I mean, at a certain point, the valuations just got where if you had a 10-year time horizon, they were never going to grow into that valuation. So she should have been ringing the register and moving on to different disruptive technology at that point in time. But to say I'm right when Roku's went from 490 to 105 and the market is wrong, you couldn't be more wrong. I mean, your stock just got cut 75%, that one position. She bought more yesterday into the print, 144.71. And I don't even want to know how many shares she's going to buy today. She's probably going to buy a whole pile today. So, I mean, it all matters. It's such a good lesson. Why do we keep coming back to Cathie? Because she gives such good lessons on how not to invest. She's giving such good lessons on ignoring, valuation, just chasing the hottest story. Just, and obviously, that's why we want to learn. We want to learn from her mistakes. And, we went through this in 2020 and in 1999, 2000.
The biggest thing she said, to my mind yesterday, was Scott Wapner asked her straight up, I mean, do you believe that all of the stocks in your funds are going to come back? Because that seems kind of silly, and that's not he didn't.
She does.
He didn't say that exact word, but he said, "Do you really believe that?" And she said, "Yes, I believe every single stock in my portfolios, in my funds, are going to come back." That is
well, she lied right there because Palantir, she blew it out yesterday. Why are you selling Palantir? If you believe that all your stock's going to come back, why was she selling Palantir yesterday as she was giving that interview? Ask her that. If you so believe in all of your stocks, then why blow out Palantir yesterday at $11 when you were buying it at 30? So something's not adding up there. Sorry. Something's not adding up there.
I think Toronto Dave nailed it. And I've said the same thing too. If you're all in on Cathie or growth, you're not going to have fun. But if you got if you got a small piece, they didn't ask her that, but I wish they would have asked her how she recommends people, allocate to her funds. But that's the bottom line here. It's really, really difficult. It's hard to double and triple down in the face of the reason people get so fired up about it is because she's doubling down, she's tripling down, and she's getting smoked out there, and she's not giving an inch. And that, I think, most people.
And maybe that's what her fund does. So she's got to go with what her fund does. Those are what, you're buying ARKK for growth. You're not buying it for value. So she's following her fund.
Yeah.
So, maybe she's doing nothing wrong in that way. But I don't know. You're blowing out Palantir yesterday. I just don't understand why you can say all your stock's going to come back and you believe in all these companies and then you blow one of them out. Maybe you're not going to get it perfect.
Okay.
But why not say yesterday, well, some of these aren't going to come back. We're selling some Palantir.
The only thing,
why
the
say they're all
biggest
going to come
mistake,
back?
I don't know about her investment, whatever she's picking and her buying, but publicizing it, making it public and like every day disclosing those positions. I mean, I think that has got her in trouble because we know the way Wall Street is, right? And it's just, if I was her, I would stop doing that. I would stop doing that, and I would
I'm not going to criticize.
Anyways,
it worked in her favor for a long time because people were coming and buying her stock. She would buy her stock and would go up 20% the next day because she bought it. So she was getting that, benefit from it. It's like, well, this is awesome. I buy the stock, then I disclose that I buy the stock, and then my stock goes up 20%. I mean, it was just pumping up her own portfolio. Not that she was doing and selling in illegal into. I'm just saying it was working in her benefit to do that. It's no longer working in her benefit. I mean, who even opens these ARK emails? Who buys the stock that she bought? Nobody. It doesn't happen anymore. It doesn't get a 20% profit anymore. So she's not getting that benefit. How much of her performance was off of that too? Like if you bought a stock and then you put it out there and then it goes up 20% just because you bought it. I mean, that was adding to your performance in itself. So we don't, to say her performance was just fantastic in 2020, a lot of that is adding to her performance was just those emails. So now that's all come off too. So Tesla's the only reason her funds are holding up. I mean, Tesla is still the biggest holding. Tesla is still holding on fairly well. Yes, it's in a bear market, but it's still $875. If they started hitting Tesla, her fund would be in real trouble. But, they're still holding Tesla up, and it's in the S&P, and it's traded every day. The ARBs are going to hold it up to a certain extent. Tesla's probably not going to start going down until the overall market starts really getting hit, if that happens.
I'm not going to knock anyone for their transparency. The other thing that she always says, and I'm going to bring on Mark Mahaney right now, but the other thing she always says is, and she said it yesterday, is their goal is to deliver 15% annualized gains every single year. There's a lot of regulation out there as to what certain people are and are not allowed to say. First off, 15% a year, that's really, really high. Second thing is other fund managers can't say that. She's allowed to say that because there's no regulation that that says she can't. But if you're an advisor or if you are like a fiduciary or whatever, you can't say that. So people, I think, are angry that she's allowed to say, yeah, our goal is 15% annualized returns a year, which is first off, it's a really high number.
Nobody does that.
Second of all, no one does that.
No, nobody does
that. And Luke is here. Luke, I got a story for you, man. We're gonna
bring Luke on here.
We're gonna uninstall the.
No, we got Mark Mahaney in the background.
Mark's coming on. Let's bring Mark. Everybody's sick of me talking, so let's get Mark.
Today is all kinds of crazy. Let's bring Mark Mahaney on the show. Evercore ISI. He's our senior managing director and their head of internet research. Mark, good morning.
Good morning.
Okay, this is sort of awkward here because we've been bashing tech for the good portion of the morning.
We need you, Mark.
Yeah, we do need you. We need you to talk. Well, those guys, not so much me, but talk them off the ledge here.
When it comes to tech in this market,
yeah.
Look, I started off the year being cautious, and in hindsight, I wasn't cautious enough. When you have aggressively rising interest rates, and we also were cautious about Omicron, but if you have aggressively rising interest rates, those high multiple future profit stocks underperform materially. And my guess is that we're in this kind of situation. I mean, this is a Fed call. This is a macro call. I don't think you're going to get material outperformance from tech stocks you may not have it for several more months. That's and look, how many corrections have we all lived through? This is my 11th, I think, over the last 25 years. The average duration of these things, barring the really big crashes, has been 3 to 6 months, and the correction has been 12 to 20%, something like that. I mean, my guess is that we're going to be in correction mode for a while longer. It'd be unusual if it ended this quickly. So I think it's very tough. The two things I try to do in this environment is try to focus on the ends of the barbell. I want to be long the highest quality names in the consumer internet space. I look at that's Google, Amazon, and maybe even Facebook. There's a lot of company-specific debate about that stock now. And then at the other end, the real big obvious recovery plays, the ride-sharing plays, and the travel names. And what I find interesting, last point, is the three stocks in my group, Consumer Internet, that have outperformed the market year to date are those that are in the kind of the Venn diagram of those two things. So it's the online travel stocks, Booking, Expedia, and even Airbnb, even though I'm not sure I would consider that high quality given its multiple. But these are all companies that, well established, lots of cash on the balance sheet, high margins, reasonably low multiples, close to market multiples, and then they're clear recovery plays. I mean, travel is coming back, but there are very few places in consumer tech to hide this year.
To be clear, when you say quality, are you referring to like the quality factor or the characteristics that you just said? Or
No,
maybe
when I think about high quality consumer tech companies, I think about companies that fundamentally and valuation wise. So, companies that generate a lot of cash, they're currently profitable, and they trade close to a market multiple. Google falls into this perfectly. I mean, it's gushes cash. They've got great top line growth. I mean, what I find interesting in this market is Google just broke below the price at which it traded when it printed great EPS results. If Google can't sustain results, the stock can't sustain its gains off of that December quarter print. There are very few companies that can. And by the way, Microsoft didn't either. And I think Amazon's getting close to breaking below the level where it printed really good numbers. This is a very tough tape for tech stocks. There's no,
at least from the long side, but there is stocks that, like you said, there's got to be some, and maybe Google's, but there's got to be some diamonds in the rough here, like throwing the baby out with the bathwater. Because,
absolutely.
And I think that as well. I think, okay, well, what companies, if you're sitting on some cash and you want to get involved in tech, I mean, the growth tech has been absolutely hammered. Is there some stocks that have gotten to a point? I mean, look at Roku today, even, and I'm not saying it's Roku. I'm just saying, the stock is, from $490 down to $105 here now. I mean, there's a lot of companies that have just been down 70, 80%. Are there any of these companies that would be a buy at this point in time?
Oh, absolutely. I'm sorry. I'm trying to get the point across as to your time frame. I think I misstated something a minute ago when I said, it's going to be tough for tech stocks for the year. I don't think that's true. My guess is that it's sometime in the middle of the summer. It's a couple of months from now, and then you'll get a chance to buy stocks that are dislocated high quality stocks. I wrote a book about this last year, DHQ stocks. And so, you want to be buying Google, you want to be buying Amazon. Now, you may not get paid on that bet for the next month or two, but I think if you have a 9 to 12 month outlook, this is when you buy these stocks. The same thing happened at the end of 2018. You all will remember that when the market rolled over, you had a chance to buy at the time, Netflix, at the time, Facebook, Google, Amazon, all were for sale, and they offered great returns for people who could wade in and buy those stocks. I think you've got a similar setup here.
What about Meta, Mark?
This is the most controversial mega cap name I cover. Nobody wants to buy Meta. This is trading at the lowest multiple it's ever traded at, barring the February, March of 2020 COVID correction. It's trading at around 13 times earnings. I think this will exit this year close to 20% revenue growth with share repurchases and margin expansion. That's 20 to 30% earnings growth, i.e. this thing is trading at a dramatic discount to its earnings growth. Its PE is well under 1. That's highly attractive. There are 3 debates on Meta. There are these ESG regulatory concerns that investors quite rightly have. There are these concerns about whether they can solve the Apple privacy challenge. And then the third one is this competitive risk from TikTok. I think all of 3 of these risks are reflected in, and more than reflected in, the current valuation. I think the company can address some of these concerns. It's not like this is a new company. They've been around for 15 years. They've shown the ability to execute well in terms of prior challenges, like the move from desktop to mobile. Facebook's one of my top 3 picks in mega cap. I don't think you're going to get paid on it in the next 2 or 3 months, but if you have a 9 to 12 month at least time frame, I think this has got great returns. I think they can have a re-rating in the stock, and I think street estimates are too low.
What turns these stories around? Because here's the problem is, this market is all about what have you done for me lately, and it's sentiment, and they're looking at, the quarter, and they're not sure what, Facebook is anymore. They see some of their core businesses under attack, but then they're trying to move into the metaverse, and people see growth, but is it too early? And the stock just continues to go down every single day. Yeah. I mean, at a certain point in time, I agree with you, value investors will start to step in and say, hey, this is cheap enough, but what is the catalyst to turn this story around?
I think there's 2 things, or 3 things. One, just in terms of the fundamentals, you need to see revenue growth reaccelerate. So, you've got tough comps too hitting this company. In the back half of the year is when I think, back half of 22 is when I think you'll start seeing revenue growth reaccelerate. Investors will want to be long the stock as that happens. Secondly, they need to prove that they can come up with a post-privacy advertising attribution model. So they lost a lot of signal when Apple made its privacy changes. They need to show that they can come up with a way to generate equivalent signal to advertisers so that they can know how effective their campaigns are. And the third is a macro call. We just need some, it's not like rates aren't going to rise, rates are going to rise, but we need some conviction in the market as to the pace at which rates rise. you go through an environment where the last 6 months we went from one Fed rate increase in 2022 to 6, and then a debate about whether it be 25 bips or 50 bips. Absolutely, tech stocks, high multiple stocks are going to get challenged in that environment. My guess is that we're going to go a couple of months into this, and then we're all going to have some greater conviction as to the rate of rate increases, and that will allow people to come back into risk elements like tech stocks.
And just to be clear, on the Meta thing, you said the Apple privacy concerns, and now it's also an Android privacy concern as well. So it's a two-front war.
Yeah.
Gosh, okay. So a lot to digest here from Mark Mahaney, Senior Managing Director, Head of Internet Research at Evercore ISI. Going through your coverage, I mean, it's a lot of tech. It's what we've talked about. It's Facebook. It's Shopify. It's you mentioned Uber. You also cover Zillow. That's an interesting one because that stock's had a very nice couple of weeks here. Can I get your thoughts there?
Yeah, I'm on the sidelines on Zillow. I've covered it since its IPO. I thought it was a risky move, but a strategically smart move to get into the iBuying business. When they so abruptly got out of that business, to me that was a negative tell. And so I'm going to wait on the sidelines on this one. There's also this broader housing market issue, which is that there's just very limited inventory, I think, for structural reasons. And I think that's going to hurt all brokerages and companies that benefit from brokerages, i.e. Zillow. So I'm wary of Zillow. I'm happy to step to the sidelines on that. My top longs in mega cap would be Meta, Amazon, and Uber. That's my recovery play. And then if I go down cap a little bit, I like names like Spotify, even with all the Joe Rogan controversy. I like Spotify. I like Chewy, and we stick with Roku. I wish I hadn't said that prior to the stock correcting 20% last night, but that's all right. The revenue growth is still here, is premium, and I still like the long-term market opportunity. I want to wade into these stocks.
Well, let's talk Roku here because it's the story of the day. I mean, it's down substantially here. It's $106 here now. We mentioned it just briefly, but let's dig into some of the details here, just from the fundamental aspects. Like, do you see this company turning the corner, eventually making money here? Is the growth rate, obviously it's a concern, and maybe there was a lot of sales pulled forward when we were in the pandemic, but is there any concerns here? Like, or do you think this growth rate, like obviously it's not going to grow at 50% forever, but do you think at this point in time, at this price, that the growth rate, can justify price?
Yeah, what I find interesting here is you look at that chart. This stock is exactly where it was pre-COVID. So go back to the middle of February of 2020. This stock is completely round-tripped. The revenue base is bigger, so that means on a price to sales basis, the stock is cheaper than it was pre-COVID. And the action question that we all need to ask ourselves is, and you can kind of see if you also include you'll see this in the chart. I think it's relatively clear, but if you also, bring in the aftermarket from last night, you'll see that, you're right back, like, whatever we are, 115 or something like that. That's where we were mid-February.
105.
Okay. So now we're cheaper. And then you have to ask yourself, well, is Roku a stronger asset fundamentally than it was pre-COVID, or a weaker asset? I think it's a stronger asset. I think at some level, the move towards streaming usage has accelerated. And I don't think they face the maturity issues that Netflix does. I downgraded Netflix early this year because I sort of felt like when you had a maturity issue in terms of theirs that was indicated, signaled, whatever, by their subs guidance, their weak subs guidance. I don't see that with Roku. I think they have the ability to add just as many active customers this year. That's their lead metric. That's their sub number. They have the ability to add just as many in 22 as they did in 2019. And they're still sustaining this premium 30% revenue growth. So to me, the asset is as good or better than it was pre-COVID, but the valuation is more attractive. So yeah, I want to wade in and buy that. But you're right. What they did was they shocked people in terms of the profitability. And people expected them to do something like 500 million in EBITDA this next year, and they're essentially saying, we're going to be running this at 100 million, or a much lower number. They're accelerating their investments in international expansion. That's a good thing, but not in this market. In a market of high multiple future profit stocks underperform, and they just pushed out their profitability, and that's why the stock's getting punished today. But I think I think you weighed in on this with the expectation that you can get paid not in the next 3 months, but in 9 to 12 months.
What about Shopify? And this is obviously one that's been hit really hard too. I love this company. I love everything that they do. The valuation has obviously been high, but it's coming down very quickly here. I mean, and since the earnings report, we've lost, over 200 points here now. We're trading at 656. What are your thoughts here? I mean, can this eventually grow into its valuation as well?
I think so. I've been wrong on this one. We upgraded this stock. I've generally had a long bias on it. And last year I kind of stepped to the sidelines. I thought the multiple's too high. And then I thought we had enough of a correction. And I stepped in and we upgraded it and did it prematurely, clearly, with hindsight. I think the asset, I think it's still a great asset long-term as a kind of the anti-Amazon kind of as the kind of the online retail ecosystem, if you operating system for small merchants worldwide, and I think that allows them to sustain premium growth for some time. The problem with this company, sort of similar to Roku, is they're saying we're not going to show you profitability near term, and because we're investing in things like building out their fulfillment network, and the market wants in this environment, the market wants profitability, wants a profitability floor, and the company is not providing that. So you've got to slow down in the top line growth. Profitability is coming under pressure because of these investments, and a stock that was trading as high as 25 times sales, it's now trading at 10 times sales. The market, and if you're trading above 10 times sales, your margin of error is so thin, and they didn't make it. So, but I think on the other side of this, I think Shopify will emerge as a good asset. And yes, the basic point is I'd rather buy Shopify 10 times sales than a 25 times sales. So it's got a much greater chance of building into this valuation than it did really at any point. I think this is the lowest price to sales multiple it is traded at in, I'm going to guess, 4 years.
Mark, just one quick question for you. I mean, on our show over the years, we've tried to help traders and investors, change styles and look at the market from different perspectives, whether it's value versus growth, rising interest rates or falling interest rates. I mean, you've been at this for a few years. How have you had to adjust, your methods of analysis of looking at the markets and looking at the stocks? I mean, I could go back to 2020 or, the pandemic or things that are going on more recently, or have you just stuck with what's got you here? Has there been any change in your methods of analysis?
Well, I take a different approach to stocks. So, again, the consumer internet is not a value sector, although there's a couple of names in here that have got reasonable valuation pitches: eBay, Expedia, Booking. Those three come to mind, and maybe even Google. But I do try to trim and tack based on what I think the market environment is, and the market's looking for. I mean, growth equities. Market's not looking for growth equities now, flat out. And so in that environment, it is very hard to make money on the long side in this space. And you really need to find high quality, really super high quality assets. I mean, in terms of both valuation and fundamentals and recovery plays. And that really, of the 40, 50 stocks I look at, it's kind of only 3 that get you there. And that's Booking, Expedia, and Airbnb. My guess is that as we go through the year, the risk appetite will widen a little bit, and then we'll be able to be long, safely long for the near term. Just pure recovery plays like Uber, or pure high quality plays like Amazon and Google. So that's how I've tried to react to this environment. We shifted our list quite a lot at the beginning of the COVID crisis, and then when we felt like we were at peak COVID at the end of 2020. So I do try to shift the list. I don't have the luxury though of looking at sectors other than consumer tech, because that's the only sector I cover. The question is just how. Do I want to be aggressive about it, or do I want to be cautious? And flat out, I want to be cautious about consumer tech, especially consumer internet right here, right now.
Awesome. There was a question from our chat about a firm. You don't cover a firm, right, Mark?
I'm sorry, I don't.
Yeah, that's what I thought. All right. Mark Mahaney, it has been a pleasure to chat.
Thanks, Mark. That was great.
Thank you.
Thanks for sharing your thoughts with us. Thanks for coming on today.
Thanks, Mark. That was great.
That was a really good perspective on things, right?
I think so.
Yeah.
And I get caught up in short-termism where you're in it and you're looking and you're like, oh man, this is going down. I mean, you've still got to be looking that there is some opportunities. If you've got a time horizon, I don't know if 12 months is long enough, but if you got the 5-year time horizon on some of these stocks.
Well, I know someone who does have a 5-year time horizon, actually.
Yeah, I don't too. So I'm not saying those stocks that are in that portfolio, but I'm saying there is some, there is going to be some stocks here that you'd be like, wow, I can't believe it traded there. So I don't know which companies those are, and and that's why you want to talk. I think Shopify eventually will be a buy, but again, 10 times sales, 25 times sales is insane. 10 times sales doesn't sound great. It got down a little bit more. Like I said, 500 on Shopify, another $150 down from here. Seems like you're starting to get into where I can see it growing into that valuation. I mean, Mark likes Roku right here, thinks it can grow into that. It's not a crazy valuation anymore. It's just a matter of I don't know if somebody, you say disruptive technology. I'm not sure that Roku doesn't get disrupted itself by something else. Like a lot of, obviously, this technology can be built into the TVs now. It doesn't all have to be Roku in the TVs. So, I mean, the disruptive technology can sometimes get disrupted itself, which makes it a little bit scary. But, $105, a lot better than it was at $490. What about a firm, Joel? I mean, you want to talk about a fall from grace. There may be no better stock as a poster child in the last 3 months in a firm. I mean, this stock made a new all-time high in November at $176 when everybody was buying now and paying later. And now it seems like nobody is buying a firm now, at least. I mean, this stock went from $176 in November. It is now $37. It goes down every single day. Again, we say Facebook and PayPal. There's a poster child here of when you miss. This stock was $50. It's $37. 5 days later, they just keep punishing you. At a certain point, maybe, there's a deal here, but I guess you got to really believe in the technology. You got to really believe that the business model works. I'm scared that that business model in itself maybe, isn't as good as we thought it was 6 months ago.
No, I mean, it got the hype, with
all-time lows.
with the Amazon new all-time lows. I mean, you could just wait for a couple lows in the same area. That's all you could do as far as the looking forward. I mean, you can speculate. I guess the earnings weren't that bad, but it was once again it's the guidance. When the company comes out and gives you bad news, it's just hard. You're not going to get any potential good news for another 3 months, right? Or unless they do a mid-quarter update. So just wait for a couple lows in the same area. I'm a bag holder in MQ, which has been holding up, has a
What
similar
stock's
business.
that one?
MQ,
Oh,
Marquita. It's
yeah.
kind of in the same range. So I've gotten a haircut in it, but certainly not as much as owning a firm. So I could only really talk on technically and wait for it to make a couple lows in the same area.
It just makes it's going down and it's getting hit harder than the Facebooks and the PayPals on a percentage basis every day. I mean, I look at this thing, it's down 5-6%. It seems like every day. I mean, I don't know where firm is it oversold? Absolutely. Are all these Cathie stocks oversold? Many of them are very oversold. So there could be wicked snapback, little short squeeze rallies embedded in some of these names at a certain point in time. I just don't know if today's that day because, again, I'm worried about the Ukraine situation. I do think it sets up that people are going to be nervous into the weekend. We have an option expiration today, which we haven't even talked about yet, which is going to bring us increased volatility. And obviously, the S&Ps are chopping around. We're already seeing that. So the one thing we can promise you today is you're going to have a very choppy market. And again, if you're chasing in a choppy market, you're doing it wrong. Always, there's certain markets that you can chase.
The
edges. This is not one of those markets. I'm going to keep saying the same thing. I'm kind of on repeat the last couple of months because it's working. So if I say something and it's working, I'm going to continue to say it because it continues to work. Once it stops working, then you've got to obviously, and nothing works forever. You've always got to change your strategies up. You've always got to change and tailor your trading to what the market is giving you. Don't try to make the market do what you want it to do. You do what the market is telling you to do. That's what you've got to do with your indicators. That's what you have to do as a trader.
I think one thing that exacerbated some of these moves is the way these stocks acted prior to the report, right? And then it went from 50 to 80, so people are leaning, the wrong way. I saw this in a couple other stocks too. So you had a lot of people underwater, then a lot of people buying it into the report, and then boom. Did that report come out in the middle of the day or something? Wasn't that even?
And they accidentally, part of it leaked, and then they had to
there was
release
a tweet and everything. So
Yeah.
a lot of negative
Just
things.
people caught so much from that. You even had day traders because there's classic day traders that don't trade They don't want to get hit with news, so they only trade intraday. A lot of them are like that. I mean, even some traders in our firm. I mean, there's a lot of traders that don't want to get hit by news, and there's usually not news during the day. But people got hit by that. So you had classic day traders, that are real intraday. Like, I'm a day trader, but I'll trade overnight. I'll take it, further. I mean, I have strict day traders that only trade during the day that got caught in that. And they never got bailed out. So they're like, oh my gosh, I just bought this at 80 and it just reported it was 70. It's like, well, it'll bounce back a bit and I'll get out. Those people are still waiting for a bounce back. So, I mean, $37. It's unbelievable. Stock is down 80% in 3 months.
I mean,
a stock that was a darling.
And we haven't even talked. Someone asked us to talk about DraftKings. We didn't even get to that today, but they're getting punched in the face this morning as well. And they raised their guidance, and it doesn't matter.
No, it's just bag holding everywhere. DKNG's got a big level, 1741. That's the all-time.
They raised their guidance this morning.
We're talking about the lows and not the all-time low I believe that is a low since it de-SPACed. I believe, if I'm not, Mitch might be able to help me with that.
The de-SPAC low is 1740.
I think it's 1741. That low,
you're right.
January 24th. So since it de-SPACed, since it actually became DraftKings, that's the low of 1741. Because you can say, the all-time low is down to 10, but since it de-SPACed, we didn't know it was going to be DraftKings when it was a SPAC. Since it de-SPACed, this is approaching that. It's a big level for it. Again, valuation though, and I own GNOG, and I'm so thankful that I sold my GNOG into the DraftKings takeover. I sold it that day when it got taken over, and it actually went up further. I sold it like 18, and it went up to like $22, and I was like, man, I screwed that one up.
Guys, I'm going to hop here. I'll let you guys take it away. I'm going to go cover a lot of issues that we missed. Triple D, I need to catch up with you later on today, okay?
Yeah, sounds good, Joel. And I'll just stick with you just for a couple more minutes because I know I've been on a bearish rant here for pretty much the entire show. But I think Mark adds the color, that sometimes I need as well. Taking off the short-term goggles and putting on the long-term goggles. Buy good companies at reasonable prices. That's how you've got to take your long-term approach. And there is some deals out there. Do your due diligence. Look, if the companies are burning cash, maybe those aren't the ones you want to jump into, but there is going to be some decent stocks out here. Maybe this weekend I'll look for a few more of them, companies that I'd be willing to dive into. I have some ideas, but again, it's just been in such a terrible tape right now where it seems like there's just, like every time you buy something, you regret it 3 days later. At a certain point in time, we will have a relief pop. At a certain point in time, there will be. Somebody's asked me about the $6 Amazon back in 1999 and 2000. Yeah. But in 2002, Amazon got down to like $6, and we know where it is now. So there is going to be some companies that are going to emerge from this. And like I said, we won't even, I can't believe, we were getting that gift. The problem is there's going to be a lot of companies that aren't. So this is like to Mark, to what Shaken was saying yesterday. This is a stock picker's market here right now. And there's going to be some winners and there's going to be some losers. Some of these stocks that are down 80% are going to go down 100%. They're going to go to zero. Some of these stocks that are down 80%, though, are going to go back up and be significant winners. So, and maybe in the long run, maybe ARKK has enough of those winners to make up for the losers. So, maybe, ARKK is the way to go if you just want to buy growth and you believe in it. It's a hell of a lot cheaper at $66 than it was at $160. I'm still just don't know if her stocks are cheap enough yet for me to jump in and say I want to buy them all. But I think if you do your due diligence, do your homework, chat. I'll give you some homework for the weekend. Bring us some stocks on Tuesday. Bring us some stocks that you are trading growth at a reasonable price, and we'll look at them, we'll talk technically on them, and maybe we'll buy some of them. So let's do that. Let's all do that together. Find the stocks that are trading reasonable. I'm sitting on 35% cash. Spencer, you too? I'm willing to put some of that cash to work 35%. In my long-term portfolio.
I don't have 35%.
But I'm not going to put it all to work, but I'd bring it down to at a certain point in time, I'd bring it down to 25%.
There's a couple of stocks. Stonebridge Advisors mentioned Philip Morris. Yes, that's the kind of stock you want to buy, you want to own right now, right?
But that's not long term. I'm not buying Philip Morris at these prices. Long term growth. I think what I'm asking for is more of those growth stories that are down 60, 70, 80%, because some of those are good companies. Some of those are going to come back. Not all of them. Probably a lot of them aren't, but some of them are. We got to figure out which ones, are going to be those Amazons that are going to, take over our portfolios for the next run, because there will be another bull market again. Stocks will eventually, some will come back, not all of them. So we got to just do our homework.
And whoever it was that dropped us a super chat about Roblox, we talked about it at length yesterday because it was the day after their report. Dennis, do you have any comments on RBLX?
Didn't get out yesterday, so got an upgrade yesterday. That should have lifted it. It tried to lift, it couldn't. It's sitting right near the lows. If it takes out the 53.08, Katie barred the door. So if you are along this thing, you absolutely do not want to see it take out its low from yesterday. Takes out the low from yesterday, it's a good short.
Exactly what
So that's the scary thing, is I actually look at this as a short setup than a long setup, and I know people don't want to hear that. They want to hear it's going to come back. The path of least resistance, I believe, for RBLX is lower, and I think it might be much lower. So if the market turns around, that'll change too. But as long as it's above 53.08, you could take a shot. But I'm more inclined to short it through 53.08 because I think it takes it out. I think we're going to see Roblox sub 50. Sorry, that's just my opinion.
Sub 50. All right.
No position on it yet, but I'm eyeing it up actually for through
Okay,
53.08.
so I've got some homework. I'm going to do a screen or several this weekend and see if I can find some companies that maybe we want to put on the watch list going forward. Dennis, have a great rest of your day, guys. I got to hop as well because I got to get ready for our next All Access show, Benzinga All Access, our weekly show every Friday at 9:15, where I go one-on-one with founders, CEOs, executives, just about their story and about their company. So that'll go live at 9:15 today. In about 10 minutes from now, the stream will redirect to that. So give me a few minutes to just get set though, and I'll bring that show live. We have 3 guests on the show today. So stay tuned for that. Thanks to our guest today, Mark Mahaney. Really great talking to him. First time on our show, and a fantastic conversation. Thanks to all of you in our chat. I'm in a better mood now than I was a couple hours ago. That was because of you all. So thank you for that. Hit that like button. And then, tomorrow, by the way, if you haven't checked out our boot camp, benzingabootcamp.com, it'll be on YouTube. It's free. I will be hosting tomorrow, 9 a.m. Eastern time, Benzinga Bootcamp. I think that's right, benzingabootcamp.com. Let me check right now before I don't want to give you bad advice. Bootcamp. Right. Is it right? Yes. Benzinga Bootcamp. No, yes, it is. benzingabootcamp.com. Okay, check it out for the full agenda. I'll be there tomorrow, 9 a.m. Eastern time, right here on YouTube. Everyone have a great rest of your morning. I'll see you in 8 minutes. Okay, All Access on Benzinga, 8 minutes. Catch you guys over there. Let's not lose our shirts today.